In this lesson, we are going to be focusing on momentum. But what is momentum? Well, momentum is required for price action movement to occur on our charts. And this is due to the buying and selling of an asset. And this buying and selling, and thus momentum, is offset by levels we have discussed in the previous lessons, our levels of support and resistance. Now we can take the S-curve concept, which we see across all life, to better understand momentum and how it affects our chart's price action. Because we constantly see this upwards and downwards movement and this swinging that creates our S-curves, which we see on our charts. On some charts, we will see a more subtle price action and thus a more subtle S-curve, where on other charts we will see a more aggressive S-curve and thus more aggressive price action. The same as if you drop down to a lower time frame, you are going to see more swings and a more aggressive S-curve. And this is due to price being offset by our levels of support and resistance. So these levels affect momentum on our charts, which in theory create this S-curve which exists on our charts at all times. So to better understand momentum, let's move down into here. Let's first clean up our charts, and we can move into the analogy of throwing a basketball into the air. So we throw a basketball into the air, and this throw we are going to class as the ignition point. So we throw the ball into the air, which gives the ball the energy, and it begins to move up. And it's going to move up and take its natural path until it begins to exhaust and lose momentum. And then it begins to exhaust and move down. And what is going to offset this downward movement then? Well, it needs to hit something to offset that downward movement. So in this example, we could use the ground. So let's say the ball is moving down, it hits the ground, and what occurs then is reignition. So the ground supplies the ball, it reignites the ball, and it begins to then move back up. And as you can see, this creates that lovely S shape then, and it then begins to move up before again once falling down. So that is what creates this momentum shift. And if you just think about this concrete floor here that has supplied this reignition point here and created this S-curve, this is basically, in relation to our charts, our level of support. And you could clone this and say that the reason it moved down here, so it lost momentum, is because it was offset by a level of resistance. So if we move up here and we add our basic level of support on gold here, we have the monthly level of support, the swing low. And actually this is not the monthly level, because this is not a distribution candle on this time frame. So we actually have to go and find the distribution candle, so the swing low, and we need to find that distribution candle, because it's really important that we find the level it exists on, because the level of strength is going to dictate momentum and the amount of momentum that we can expect to come into the market at these levels. So that is really important, and we are going to understand that further in the future as we progress. So actually we have the swing low support on the weekly time frame, and you can actually see how previous to this swing low was reignited off of this previous swing high as the swing high of the swing low candle. So you would initially had the swing low here on this weekly swing, and you would then have the high, which was initially resistance. You break through it, you then use it as support, which ends up supporting the move, but you also create a swing low support here. So we'll just go back to having that first level, our swing low support. And if we move back out onto the monthly time frame, just for visual purposes, you can see just how well, if we, bring our basketball into play here, make it a little bit smaller, it moves up through the air, it goes through what we know as distribution now, it moves down, it exhausts until it hits something, and it hits our level of support, reignition point, and it then begins to move up. And because this is a strong level, we have stated that this is a weekly swing low that we have marked here. You are likely going to see a large movement up, because it is going to use this level to support the move and reignite the movement up. So in the next lesson, we are going to look at what other levels may offset our momentum and what we can expect to see in terms of the move off of these levels, which is based upon volume which comes in, because volume offsets momentum, but also level strength. So let's continue to focus on momentum. And we can see here how our level has nicely supported the move. And what it has done is it's offset momentum and stopped this big bleed here that we see. So let's say in Phoebe then, we bought this level here. So we bought this support. And when we buy, or we are looking to enter a trade, we also need to think about our target. Where would we exit? So let's say we have identified this basic level of resistance, this swing high as resistance here in this move. We're going to buy here and hopefully sell here in the future. But actually we can see this support here fuels the move, but actually something offsets the momentum here and it moves back. And you may ask, well, could this be another level of resistance inside of here? And yes, it could. But actually, in this scenario, it is our resistance in the form of our downwards trend here, which acts as resistance. So just like our horizontal levels act as support and resistance, so do our trends. And these trends, just like our levels, offset momentum. As you can see here, price moves up to go after target, but it's actually pulled back and momentum is offset because it's hit trend. Just like here, something has offset the price here to move us up. And that also is trend, because trend, just like levels, work in the very same way. Remember how we discussed how you have a level of resistance and you come up to this level of resistance, you hit the resistance, you pull back. You may hit the resistance, pull back again. Once you then break resistance on this side, it then is acted as support. So resistance becomes support in the future, just like support, if support is broken, becomes resistance in the future. So just like levels, trends work in the exact same way. So let's clean this up. And so what has this hit here? And this actually hit a past trend of the past. So let's add the magnet tool back on. We have the swing high to the swing high here. And this is what has been hit. We have trend. So just like we can see here how we have trend, you know, resistance, 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 comes back down, offsets momentum off this level, moves back up to go after that top resistance as target, comes up, breaks the trend, comes up, hits this resistance trend, pulls back. But what occurs, once you've broken this trend switches on now as support. So it used to be resistance, but now it acts as support. It offsets the price here, moves us back up. This break reignites the momentum up. This probably hits our swing high resistance here. It pulls back, hits a different level here. And this is actually trend once more. So we also have a trend here as support. A bigger trend from swing low to the swing low in here. So if we actually remove all this mess on our chart. We've added some basic levels, and these levels are strong levels because they've been created on higher time frame. These are all monthly or weekly levels we have here. So actually, you know, we put this to the monthly swing low. We have the swing low here, connects to this swing low, and you can see here, look, how this is what offset that downward momentum in this move and continues that movement up. You see here how, yes, we do. We come up, we hit this level and we pull back. Because if we go into a lower time frame, we'll be able to see the pullback which occurs at that level. So we go through that first hit rejection. So we hit the level, first hit, rejection, pullback. Now after we hit the level, we often also see this, and this occurs after first hit. We get what's known as first test, where we test and we wick above the level, we move back down, and then we can break the level. So often you get first hit, which is that 90% rule, which is then followed by first test of the level, and then you can move over the level, which is what we see here. So now we have begun to understand momentum, and all these levels on our charts create this S-curve. And what these levels do is shift momentum that we see in our markets, because traders are going to buy and sell these levels, and these levels, you know, and the breaking of these levels supply the price with momentum. So there we have it. We now have an understanding of what creates the S-curve on our charts.